All right. So here's the question. It was in the Black Owned Business Group in Facebook. What's the difference between the LLC and the S Corp? My business is beginning to grow more and more, and I'm hiring my first employee soon. Also, is there an accountant in this group? I didn't even see the accountant part. But true to form, I always want to try to answer the questions first, right? Serve the people first. Stewardship is one of my favorite words. And so that's why I always try to honor the people first. All right. So what's the difference between the LLC and the S Corp? LLC, a limited liability company. Okay. A limited liability company, and an S corporation, right? They are entities. They are business, different forms of business. They are there first and foremost to protect liability or protect the owners from liability. All right. Not really about taxes for the most part. There are some tax benefits for some of these different entities, right? But first and foremost, they are about liability protection. For example, let's say you go into business and you're a truck driver and you're driving along and you hit somebody, and your business is in an LLC and the truck is business owned. And I'm just kind of giving you the quick and dirty of this all, right? You may have some, because that's a complicated situation when you have a car accident, you may have some liability protection. And I'm assuming the accident is your fault. You may have some liability protection from the people that you hit, so they can't come back and sue you and take your home or take any other assets or any other businesses you may own. All right. Same thing for a corporation, whether it be an S Corp or a C Corp. That's an LLC. S Corp, same thing. C Corp, same thing. It's a form of protection. Now, there are some differences. A lot of times these LLCs, which people have, they are considered a solo member LLC. So that's a LLC for one person and one person alone. There's no other ownership in that group. They still file their tax returns the same way as a regular individual does. It files a 1040, and they still have to report all their income on, again, their personal tax return. But if something were to happen, it helps protect them from potentially getting sued. Potentially. It's not foolproof. You have to do a lot of other things. Now, the lady also asked, is it better to have an S Corp? It depends. There's a lot of people, there's a lot of Jack Lake folks running around out here saying that everybody should get S Corps or corporations. Again, it depends. All right. There are no cookie cutter situations, but an S Corp is just a corporation that has decided to elect S Corp status. Okay. It has elected S Corp status. So you can file for your corporation and then you can tell the IRS that you want to elect S Corp status. You also can have an LLC that is not just solo members. All right. You can have an LLC that is for partners, and you are treated like a partnership. So there's a little bit of a distinction there. All right. That money that you make with the LLC, with the partnership, it still goes to your personal tax return. So they're called pass-through entities. All right. An S Corp is also considered a pass-through entity. So any profits or any losses you might make in the LLC for the partnership or the S Corp, you pass along to your personal tax return. All right. There is a bit of a difference, though, with the S Corp than with the LLC for your average individual, because she said she's hiring an employee. By the way, you can hire an employee with an LLC. You can hire an employee with a partnership. You can hire an employee with the S Corp. You can hire an employee with a regular corporation as well. Now, the difference is between your regular LLC that, one individual might have and an S Corp is when you become profitable, and with that S Corp, they want you to take a market rate salary, or what's called a reasonable salary. So you have a lot of people who are electing to do S Corp. They don't take a salary. And so they don't get taxed on what's considered self-employment tax or SE tax. They're cheating the system. The IRS is hip to that. So when folks don't take a salary, when you have an employee owner who is not taking his salary, it becomes a red flag. All right. So when you see that, when you become an S Corp, again, you have other things. You still have to do your notes. Your yearly or annual minutes, right? You don't have to do that with an you don't have to do that with an LLC. You do have to do that with a C Corp. And, you have some other things you have to do. You have to start thinking about keeping balance sheets. You got to do better books across the board. And so a lot of times people are seeing these terms being thrown around social for saying everybody should have an LLC, everybody should have an S Corp. It really depends. Sometimes you don't need anything. Sometimes the best thing to have is a sole proprietorship. And yes, you can hire an employee as a sole proprietorship. So I believe her name was Mariah. So Mariah, if you're listening to this, just let me know. If you have any more questions about this, let me know. But at the end of the day, to really answer your question, it all depends. Now, I will say this, it usually doesn't make sense to convert from an LLC to, let's say, an S Corp until you're really, really profitable, right? Because then that's when you might see some tax savings from the conversion. But for the most part, your expenses and your tax deductions are your expenses and your tax deductions. You don't get a whole lot of difference. What you will benefit on with the S Corp versus the LLC is potentially saving on self-employment tax. However, when you pay yourself a salary, let me back up. SE, right? Your self-employment tax is also a payment to Medicare and Social Security. That's why that's there. That's there for your sole proprietors, anybody that's not employed. So you still have to pay the taxes. However, when you become when you become an S Corp, an S corporation, you then get to take a market rate salary, and it can be above or below what you're getting with your profits. So it all depends. So you get a little bit more flexibility on how you're going to be taxed. So it can wind up being cheaper. It can, not always though. So you always got to run the numbers. Anytime you're doing any kind of analysis or tax planning, you have to run the numbers because it always depends. And anybody that's giving you this blanket answers like, yes, you'll save money, you're good. By the way, that just made me think of something. Please don't go to people who guarantee you refunds or that will like guarantee you $10,000 in a refund during tax season. I know we're coming up to it. People about to go crazy. Anybody that can offer you and guarantee you a tax refund, 9 times out of 10 is a crook. They're a scammer. And yes, we are in full-fledged scammer season, people. So don't get caught up with the scams. I know people are going to do it anyway. Every time they say, well, my guy got me back $6,000 last year. I get it all the time, but it doesn't mean anything because 9 times out of 10 when they say that, a lot of times the guy did something kooky anyway, and it wasn't legal, and I ain't got time to go to jail. I ain't got time for none of that.